Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, the U.S. housing market has avoided a crash. It's official now because of this article by Zillow.
Zillow would know.
Zillow would know. The A in Zillow stands for accuracy. Here's the article. U.S. housing market avoids crash, but challenges remain for buyers and sellers. Let's talk about this. What makes them think that we're not going to have a crash? Like, what are some just general broad things? We have a bunch of data in the article. It deals with the economy. It deals with interest rates and a bunch of things. So overview.
So we can start out by saying that at the beginning of the year, Zillow thought that the market would be down, but apparently the market did not get that memo, and the housing market is up. So Zillow, not wanting to be left out, said, okay, well, the housing market is up, and we think that it'll be up for the rest of the year. So, Zillow is the leader in following everyone else.
They literally, from November, like in Vegas, housing market's up about 15%. And the year over year, we're about flat now. And, it's interesting that the people who predicted, in January what home prices would be by the end of the year now have to have a substantial change in home prices for them to even be close. And that doesn't look like it's going to happen because, here we are in August. Mm-hmm. Home prices are still going up. Inventory is still the lowest it's ever been. And these are two unusual things for August.
Right. And days on the market are still falling. The amount of inventory we have is still falling. So at least in Vegas, that's what we see. It's pretty similar throughout the country.
Okay, we've got a bunch of data here. So we'll start with this one. While Zillow's economists were confident that fundamentals would keep prices resilient, the sheer force of the pandemic housing boom caused others to project an equally painful come down to follow. Those projections have not come to pass. At the start of the year, Zillow's forecast for 2023 home values called for a 0.7% decline. Now Zillow expects 5.5% growth in 2023, roughly in line with the normal year just before records were shattered during the pandemic. So what they're saying is we're back to normal. We went through this crazy kind of roller coaster, and even with everything that's happening, we're just going to go back to this 4 or 5% a year. That's what they're projecting.
Right. So, the thing that always bothers me about Zillow and Morgan Stanley and a lot of these predictions is that they're looking purely at economic models, and it just seems to me, and forgive me if I'm wrong, but it seems to me that they're just looking at static data. They're not really considering human behavior. They're not really considering how dynamic the economy is and how robust the housing market is, particularly when you consider that nearly half the homes out there are free and clear. I mean, we know that 42% of the homes out there are free and clear, and we know that so many more are nearly free and clear because they owe very little on them.
And they have low rates.
And they have low rates. So that is so much support for housing that it just seems like all they're looking at is a very small sliver of economic data and really ignoring everything else. At least that's my observation.
Okay, we're going to go through some economic numbers because the first thing that was supposed to happen was interest rates were going to kill housing. Interest rates peaked back in October, 7.3%, I think.
Which we're close to that now.
We're close to that now, but what was funny was since then, home prices are up substantially since November of last year. They're up. And interest rates have been fluctuating. They went down to 6.8 or 6.7. Now they're back up to 7.2. And it hasn't affected housing, meaning I think we need to throw this idea out that interest rates are what drives prices of housing and just go back to the economic fundamentals of supply and demand. That determines price. You have supply, you have demand. Where they intersect is price. That's literally what a price is, right?
Mm-hmm. Yeah.
Okay. The other thing is that interest rates likely are just reducing the number of transactions.
Right, but they're reducing the number of transactions not because buyers are not willing to take on these interest rates. The reason that the number of transactions are reduced is because sellers are hanging on to their 3% or sub 3% interest rates, and they're really hesitant to take on the higher interest rates and walk away from this. So they don't want to sell. Because they don't want to sell, then there's not a whole lot of inventory to buy. So even if these sellers were willing to take on a 7% mortgage and keep their existing 3% mortgage as a rental, that's not helping anybody because the inventory isn't there. Now, we can count on our Caped Crusaders, known as the builders, and they're bringing some homes to market.
Yeah, that's not going to happen. Okay, here's the first economic data. The July jobs report came out. Of course, we've been told many times over the last year, the recession is happening. It's happening right now. We're watching it in real time. July jobs report, U.S. payroll growth, 187,000 jobs added to the economy. This just came out.
Right.
Like it's brand new data.
Right. But the other thing to keep in mind is that in manufacturing, those jobs are actually, some of them are going away, but the productivity has not diminished. So that lets us know that in manufacturing, we have very solid productivity with less people, which is a good thing. Okay. And the reason it's a good thing is because it keeps costs down and that keeps inflation under control. Because the economy has created jobs and because unemployment is so low, the fact that manufacturing is not adding jobs but maintaining productivity, it all means that that's good economic news.
Okay, here's another data. The unemployment rate was 3.5% against the consensus estimate that the jobless level would hold steady at 3.6. This represents the lowest unemployment rate since 1969.
Okay, to put in perspective, I wasn't a twinkle in my parents' eye in 1969.
Yeah, that was a long time ago. And we have the lowest unemployment. Literally, the job market is the hottest it's the best it's ever been. Everybody is working. There's more jobs than there are. We actually still have like 7 or 8 million jobs more than we have workers. We don't have, the problem is the problem isn't that people don't have jobs. The problem is we don't have enough people for the jobs.
Right. So now we're not implying that there is a job match for everybody, because clearly I'm sure there isn't. But we are saying that the economy does have a surplus of jobs versus workers. Okay.
Average hourly earnings rose 0.4% for the month, good for a 4.4 annual pace, both above expectations. Talk about this. If wages are growing at 4.4%, people that locked in that 2.75% interest rate, they're effectively, the real dollar amount of their home payment is less and less every year.
Right, which is something that I've said before, is that you take on a mortgage payment, and over the course of time, that mortgage payment is going to feel more like a car payment than a mortgage payment, because as inflation and as your wages increase, then everything, all the prices around you increase, but your home remains at the same fixed price. And that same fixed price over time is more like a car payment, because time makes prices go up for everything else.
Yeah. Here's gross domestic product gains, GDP, which is the measures the growth of the economy, have averaged 2.2 annualized for the first half of the year. And the Atlanta Fed GDP Now tracker of growth is pointing to a 3.9% for the third quarter. So the economy is actually growing at a faster rate. Okay, Juana, if the economy is growing at a faster rate, that's the opposite. That's literally the opposite of recession.
It is, and it kind of goes along with what I said before, as far as manufacturing being more efficient and being able to maintain productivity with less workers.
What do all these mean for housing?
So housing is pretty solid, guys. That's it. That's the end of the story. Is that housing is pretty solid. It's a good place to park money, and like I said, I always say, everybody needs someplace to live, right? So we all need somewhere to live. And if you're either making your mortgage payment or someone else's mortgage payment. Okay,
here's the last quote. At the same time, recession fears on Wall Street appear to be ebbing. Goldman Sachs has been slowly reducing its probability for contraction. Remember, they were at 100% a year and a quarter ago, and then they got down to 25%. They just lowered it again. Bank of America this week said it now thinks the U.S. could avoid a recession completely.
Okay, to me, that is just as disingenuous as saying that naming when the recession will be.
Right.
So the saying that the U.S. will avoid a recession completely is like saying that no one's ever gonna die. That's absurd. The U.S. will have a recession. The only question is when.
Yeah.
And we don't know when. Clearly, they have no idea when either. These are very highly trained and well-compensated economists, and they're scratching their heads. My take on it is that so long as job growth remains steady and doesn't go down substantially, and as long as inflation doesn't completely annihilate everyone's savings, the economy will putter along. Some quarters better than others, but there's no reason to think that the economy has any reason to sputter.
The last data, I don't have a chart for it, 90-day lates on mortgages are the lowest ever recorded, ever, since they've been tracking them. They're the lowest. People are not getting defaulted on. So the myths that I keep hearing online of the foreclosure pipeline, if they're getting ready to release the foreclosures, like they've been hiding them in a secret place with the UFOs. The government has put the UFOs and the foreclosed homes. They've stored them in a secret facility in Area 51. And they're going to launch them onto the market. Not the UFOs or the aliens, but the houses that are getting ready to be foreclosed. They've been secretly hiding them in a secret location.
I had this vision of catapults, and I didn't know if you were putting the aliens on the catapults or the houses.
Right. Right. They will deliver the houses to the market via the chemtrails all across the flat Earth. All across the places on the flat Earth, all over the globe.
Okay.
No, seriously. Like, it's gotten to a point where, like, now we're in year 4, the 4th year or 5th year of the imminent 2019 housing crash, and all the same reasons and every time this thing happens, it's not happening. And even Zillow is saying it now. I don't necessarily believe Zillow, but I just think that I don't believe there's a one-for-one correlation between a recession or high interest rates. If anything, it's been proven that high interest rates, all they do is they reduce the number of homes sold.
So
and that's it.
So you're saying winter's not coming?
We're going to have a better video tomorrow because we're going to talk about inflate. We have some really cool things about inflation and what assets you should hold in inflation. But you have to subscribe if you want to watch that video so you get a notification.
Yeah, it'll be more interesting and I won't giggle as much.
Yeah.
So,
and there'll be no aliens. Well, there'll be very few aliens. There'll just be a couple.
All right, this was kind of a silly video. I hope you guys had fun with us. Please subscribe, hit the notification bell, like the video, share the video, leave us your funny notes because clearly we thought this was amusing, or at least I did. Leave us your notes. We appreciate them. You don't have to agree with us. And if you thought that I should have been more serious, then, please let me know and I will endeavor to be more serious in the future.
Super serious. The serious, yeah.
Or not.
You're Romanian. You're supposed to be serious all the time.
I am serious all the time.
Okay.
We'll see you on the next video. Bye.
Bye.